And we are live. Welcome, everyone. Welcome to NFA Live, Not Financial Advice Live, episode number 3. Wow, are we on our third one already? It's my very great pleasure. My name is Guy. Obviously, this is Coin Bureau Clips. Thank you for stopping by today. I am, of course, joined by the wonderful Mr. Rob Wolf from Digital Asset News.
Hello, guys.
And the equally wonderful Mr. Ben Cowan from Into the Cryptoverse.
Hey, thanks for having me.
How are you guys doing? You well?
Good.
Yeah, pretty good.
Good.
How about you?
Good. I'm okay. It's been quite a good week in crypto, really, hasn't it? Everything's kind of starting to tail off a little bit now, but it's been the sentiment, I think, in the market and just in the space in general has been pretty good over the last week or so. What do you guys think?
Well, in crypto, yeah, I mean, I think a lot of people really like what happened the most recent week, and that will help put the emotions kind of in that direction. So yeah, I mean, I think a lot of people are sort of rejuvenated a little bit in the short term. I think we all are happy to see a little bit of relief here.
Yeah, man, I'm glad. I don't know if we could keep taking this sideways action as we go down and down. So I think every so often, like a little 20 or 30% run, I think it's good mentally for everybody.
Yeah, I agree. I think, I don't think, and many people are in, under any kind of illusions that this is the end of the bear market and it's up only from here. I think most people are kind of accepting that this is perhaps, I've heard the term echo bubble kicked around a few times, which I think is kind of fair enough, really. But it is good. I think it does play a psychological role, doesn't it? It allows people to make a bit of profit here and there, and reminds us that it's not all down. There are there are bits of good news, and obviously, I think it was the last stream, wasn't it, that we touched on things like that Avalanche partnership, and obviously we had Polygon hard fork earlier this week. So stuff is still going on. It's still happening, and it's nice to be reminded of that by the price charts as well, I think.
Yeah, I think so. And I always say, I mean, pay attention to the projects that are building in the bear because they'll crush it in the bull. And those ones that we keep hearing about probably do pretty well. Not financial advice, but that's how I see things.
Absolutely. Okay, shall we crack on with some of the things that we were going to talk about today? I've got now. Here we are. I'm doing my best with this new software that I'm using. Oh, there we are. I made it work. Okay. So one of the first things, all this possibility, all this talk out there that stocks might not reclaim the highs they set over the last 2 years. Obviously, all that kind of pandemic stimulus, that huge everything bubble that we saw, and lots of people now think that those good times, they ain't going to come back. So if this is true, well, I guess it's a two-part question, really. Do you guys think this is the case from what from your knowledge of stocks? And if it is the case, what effect is this going to have on the crypto market? Rob, do you want to kick us off? Yeah,
this is one that's kind of concerned me over time because I still believe in the 4-year cycle theory. I think that's, we have a halving, and we have an all-time high, then a dip and a reset. I mean, going forward. But there was a couple of quotes that came out, some of the financial titans of the past and current, one of those being Stanley Druckenmiller. And he said, look, he goes, we could go through another 10-year plus bear market like we did from 1965 to 1979, 1982. And he said the reasons for that he took a look at was reverse of globalization, that drove pretty high productivity, loose monetary policies, and of course, the interest rate hikes. So if we take a look at that and say, well, could that actually happen? I mean, if you think about globalization, what it did, I mean, it integrated the global economy, the free trade, free flow of capital, and cheap labor, right? So now with China on the ropes and the things that are going on there, and their zero policy of COVID and them unreleasing it, and then everybody getting sick with COVID, and then they're trying to like pull away a little bit from the global community, and who knows what's going to happen. Maybe it could actually happen. So when we talk about like a 10-year bear market, it's not like it never has happened. It's just that all of us here on this panel and most of us listening never went through it as adults, that's for sure. So this will be brand new territory for us. However, I will say that even if you look back in the mid 60s to late 70s, you saw that even though we didn't hit an all-time high back again for the S&P 500, there were peaks and valleys when you could take an opportunity to make, pretty good gains. Nothing goes down forever, nothing goes up forever. But you see dips and valleys and little bear bounces and bull markets. So you can still do those things. And for me personally, if you look at the market itself, I mean, our market, it's teetering on 1 trillion. It's probably below that right now. I don't know what it's at. But if you take a look at the global economy, as far as like the stock market, global stock market, you're looking at like $100 trillion. Real estate, $282 trillion. Derivatives, swaps and options, things like that, 1 quadrillion. So if you take a look at those things, where could people make the asymmetrical bet and gains? It's in crypto. It's in digital assets, things that are going on. Does that mean it's going to go up forever? No. But if we do go sideways or we have this bear market and it kind of correlates over to us, there's still opportunities out there. So even if it does happen, have a plan. Hope for the best, expect the worst.
Absolutely. Absolutely. Ben, what are your thoughts?
So I think we should also maybe distinguish between like what defines a bear market, because for me, a bear market is over when the bottom is in, not when we hit new highs, right? So, I don't think it's going to be like a 10 or 15-year bear market. I mean, you could see bear markets, some of the worst bear markets that we've had. The dot-com crash was pretty brutal. And even in that phase, the down part of the market lasted, right? But it lasted, 2 to 3 years, right? It wasn't like 10 to 15 years or anything like that. And the other thing to consider when you look at what has historically happened in equity markets during periods of high inflation, we have 2 different main areas we can look at, right? We can look at the 1940s and we can look at the 1970s, right? So the 1940s came out of World War II, the period of high inflation there. We had the 1970s that were also a period of high inflation. And what's interesting about both of them is that it didn't take 15 years to put in new highs, right? Like it didn't. But I will say, I've listened to what Powell has to say quite a lot this year. I think many of us have listened to Powell way more than we ever thought we would, just a couple years ago. But one of the things that he seems very determined on is to not repeat the mistakes of the 1970s, right? So Rob mentioned, you had this period from the late 1960s until basically the 1980s where the market just sort of went sideways. And that's essentially all that it did. We would go put in a slightly higher high. We would then go put in a slightly lower low. And maybe we were putting in real highs in nominal terms, but in real terms, right, when you account for inflation, it was pretty bad. But they made a lot of mistakes back then. And some of the mistakes they made were constantly flip-flopping between being hawks and being doves. And so the mistake the reason why that was a mistake is because inflation did not actually come back down in a sustained way to their 2%, to the lower targets. And so when they flipped around too quickly, what happened, right? Inflation just came right back. And then we had to go through another cycle of quantitative tightening again. So I think that Powell sees this, and I think he's trying to avoid that. And he's even mentioned this many times in his speeches. One time he even mentioned, I think he wants to get back to a phase of economic expansion, but he understands that we can't do that if inflation is, if inflation and inflation expectations are becoming somewhat entrenched. So my thinking is that it's not going to be a 10 to 15 year period before we get to new all-time highs. I don't think it'll take that long. I do understand why people think that, and I'm not saying it can't happen, but I don't think it's going to take 10 to 15 years for the stock market as a whole to see new highs. But it is true that some stocks will not ever see a new all-time high. And in the same way, right, cryptocurrencies, there are some cryptocurrencies that will never see new all-time highs, but something that we know and we've learned from prior cycles is that you don't need stocks not hitting new all-time highs for it to mean anything for crypto. I mean, altcoins have historically gone through a cycle and then they're dead, right? There's a lot of altcoins that have done that. Not all of them. There are a few great ones. I think, there's a few from 2017, 2016, 2015, they have put in new all-time highs, and that really helps you separate out what are actually the good projects from the ones that are maybe not as good. So it's true that there are some stocks that will not hit all-time highs, but that's probably just simply because their valuations in 2021 were purely irrational and based on nothing more than momentum and that sort of stuff. We haven't been in a phase of like really value investing for a long time, just because the access to capital has been so cheap. So yeah, I mean, I think that there will be some stocks that won't hit all-time highs. There will be a lot of cryptocurrencies that don't. But in the same way, it'll probably help divert a lot of money from sort of the weaker stocks and the weaker cryptocurrencies into the stronger ones. And I actually think it'll be healthier for crypto overall.
Yeah, and of course, as well, I mean, we won't see the like of what we saw in 2020, 21 again, or at least I guess we hope so. With all that money just flooding the system, which is, I think, especially in the US, if I'm correct, I think there's still a lot of that money, a lot of that stimulus money, still kind of sloshing around. Not so much where it's perhaps needed the most. But I think a lot of people, let's face it, who were doing well before the pandemic, probably did pretty well out of the pandemic themselves, got basically handed a load of free money. And I think a lot of that is still kind of in the system. And I think going back to what you were saying, Ben, about Jerome Powell, I think he's fairly keen to see if he can flush some more of that money out before he considers, bringing rates back down again or anything like that. And Rob, I mean, you touched on this phenomenon that seems to be getting stronger all the time now, stronger by the day. This idea of deglobalisation, and how things are, the world seems to be kind of reordering itself before our eyes. And I mean, do you think that's going to affect any kind? I guess stocks, perhaps like Apple, that rely on kind of long supply chains and things like that, and have to be assembled in one country and shipped all around the world. That's going to have a big effect on those kind of stocks, isn't it?
Yeah, it's going to, because I mean, again, cheap labor, cheap products, and then just really the shipping costs across the Atlantic. But there's this new term coming out. It's called nearshoring, and what they're taking a look at is, like for America and Canada, for instance, if we can't get different supplies and different goods from over in China because of things that are happening, or Russia or wherever else, we do what's called nearshoring. So we kind of pull the different countries that are around us and try to pull those assets or those products from there. So Mexico, I think, is going to be one of those big individuals or entities that's going to benefit greatly. I know, like last year, there was a big uptick, especially because of what happened. Actually, no, 2021 and 2022. Over $400 billion in goods were increase from Mexico to the United States and Canada because of the different problems and supply chain issues that were going on in China. Now, the only problem is that the resources and things that China has, it's not available in every single country. However, it's not like China has all the different resources. All they do is just own rights, especially to things like cobalt and things like that. They just go to different countries and say, that's ours. They take it, they manufacture it, and they ship it to people like us. So if we're going to be able to deal with this deglobalization, we can do these things, but it's going to take time. And it's called, hopefully, nearshoring.
Yeah, and I think we're seeing that bit a lot with Taiwan, especially, isn't it? Now that this seems to be kind of what everyone feels could be the next big flashpoint, there seems to be a kind of panicked, headlong rush to try and get everyone who can do so to get their own kind of native semiconductor industry up and running, because of this kind of nightmare idea that China will take over Taiwan and then have control of basically the entire semiconductor industry, which means essentially the entire output of the world almost.
Well, exactly. And then real quick, that's why Congress passed the CHIPS Act, so they can kind of cut out China and different things that are going on. I just saw a post that one of the first Bitcoin miners was manufactured, fabricated, and sold here in the States. So it's not like we're that far behind. Oh. So I think there's good things ahead. It's just going to take a little bit more time.
Yeah. Have you guys come across Peter Zahan's book, The End of the World is Just the Beginning?
Yeah, No.
It's a really fascinating read. I'm listening to it at the moment on as an audiobook, and it kind of talks about this whole deglobalization process, and it's kind of it's a bit of a gloomy outlook. But I mean, spoiler alert: the US does very well out of it. I think you guys are going to be just fine. The rest of us, I think, we're all going to be clamoring for US visas before very long, if Peter Zahan's right. But it's a fascinating book. I do recommend it. Anyhow, let's move on then. Thanks for that, guys. Right, let's. So the next question we wanted to talk about was obviously stablecoins. Stablecoins never far away from the discussion when talking about crypto. And there seems to be a real kind of battle of stablecoin. It seems to be getting kind of more and more cutthroat by the day. And obviously the game really changed sort of in spring last year, didn't it? When UST collapsed, because I think that was kind of everyone's hope that we'd have this decentralized alternative, and nothing like that has since appeared. So instead, we have these sort of centralized stablecoin issuers kind of duking it out at the moment. And obviously, we've got Binance and Paxos combining with BUSD. We've got Circle's USDC, and obviously the one that's never far away from this sort of talk, USDT and Tether. So I'm curious to get you guys' thoughts on it. Do you guys have a particular favorite stablecoin that you use? Do you try to avoid them altogether? And do you think there's one that's going to emerge victorious? And if so, which one? Again, a multi-pronged question. But Ben, do you want to take the lead on that one?
Sure. So, I mean, right now, and I've kind of held this opinion since Q1 of 2022, is that I don't really trust the stablecoin market. As a whole, not to say that they're all going to go the way of UST, right? Like, I'm not saying that. It's just that we don't know which ones are going to make it, right? We simply don't know. And, thinking about like USDT, there's been FUD around that one for years. I mean, it's literally plagued crypto for multiple cycles now, and it's still around right now. Perhaps it'll be a period of higher interest rates and something like this that'll actually finally expose whichever stable coins are vulnerable. But I'm of the opinion that it's not worth gambling my own money in the stablecoin market until we sort of have more clarity on which ones are going to make it. And I know that's a very risk-averse approach to have, but essentially what I did was back in like Q1, I just converted all my stable coins to cash, and I'm just sort of waiting for the cryptoverse to show a bit more signs of life before I take the plunge once again. I will say though, the main ones that I've used, though, I can talk about that. I mean, I have used primarily USDC. Is the one that it's sort of like the one that I typically have used. I have used USDT, but not because I really wanted to, but sometimes that's just where the liquidity is, right? And I mean, when you're making trades and stuff, you have to go where the liquidity is. And I can say I never held it for very long. It was often just a way to get out of a certain position. But it is something I've traded with before. I've actually never touched BUSD. To be completely honest, I've never held it, never had it. Don't really have anything against it, but the thing is when thinking about who's actually going to win, it's impossible to know for sure. But I would actually put forth the idea that the winner might not even exist yet. Is something that we have to consider as well, because there is going to be a lot of upcoming regulation, I think, and I think it'll probably hit the stablecoin market too. Because, I mean, you look at what happened with UST, like, right? I mean, it just when things collapse like that, it's going to lead to regulations, and so there's always a possibility that the one that ends up winning is one that just simply does not exist yet. If I had to pick one right now, I'd say I prefer USDC, but it's not one that I even hold right now because I don't want to gamble my own money in the stablecoin market until until the cryptoverse is showing a bit more signs of life. Because as long as we're wondering, who's solvent and who's not, there's just that ongoing risk, right? And the sort of the idea of stablecoins, and one of the main reasons that I use stablecoins, especially in the bull market, was because you can generate yield on them fairly easily through all sorts of different means, even decentralized means as well. But I mean, we do have access now to fixed income investing thanks to Powell and the raising of of interest rates, and you can go earn 4 to 5% and just cash now, right? Like, so there is at least a competitor to it that I feel like didn't exist a few years ago. Now, again, the Fed will eventually lower interest rates, and it will make cryptocurrencies more attractive again. But I still think we're still a little ways off from that, right? We're still a ways off from them lowering interest rates and going back to QE. It might not even happen until next year, or maybe late this year. I mean, but they've said it won't happen. They've said it won't happen at all this year. It could happen late this year, but it might not happen until next year.
Every time Jerome speaks, he seems to try and hammer that point home, doesn't he? With every opportunity, it's like, please don't hold your breath on interest rates.
And no one believes him.
I know.
Right? Like, I think about 2022, like the Treasury market. I mean, like, no one, the markets did not believe him, and look what happened, right? They constantly had to reprice in higher interest rates, and they're kind of doing the same thing again now, though admittedly as we get further along. Eventually they'll be right? They're not going to hike forever, but
yeah. Rob, how about you? Because I think Ben I think makes some really good points there, and I think as well it's worth pointing out. It's worth expanding on that point a bit that you make, Ben, about how you say gambling with your own money when you talk of stablecoins, and obviously I think probably a few people would have raised eyebrows there, but I guess if you're in stables, you are in crypto, and you are exposed to that risk. You're exposed to obviously the kind of risks that we've seen with the likes of UST. The stablecoin failing, a bank run not being able to keep up with withdrawals. And also, of course, there's the regulatory aspect of it too. I mean, there's always going to be that risk until these regulations get locked in places like the US and Europe. There's always going to be that regulatory risk as well. So, yeah, the stable coins there. You are still taking that risk. Is that the way you feel as well, Rob?
Well said, both. Yeah, I will say this: like just a year and a half ago, what Ben said would have been hearsay, would have been just ridiculous. Like, how can you say that it's risky to put your money into stable coins? I'm gaining all this yield on these centralized exchanges. What are you talking about? You're a charlatan. You're an idiot. You don't know what you're talking about. Fast forward to today. Now here we are, and it's just common sense. So it's amazing how, and this is the thing that it always gets me. When I think I'm right, I start to think about all the times that I thought I was before, and just how off I was. And these are the things that remind me of is that I got to be careful, because I'm not that smart to figure it all out. So having said all that with stable coins, let me ask you guys a quick question. Besides for trades, like Ben talked about, liquidity, beside for yield, which I don't know who's doing that degen play anymore. And then besides a store of value, especially if you're in like other countries, third world countries especially, like what else is the utility for stables right now? Is there anything out there that I'm missing? And of course, people who watch the video, tell me in the comments, because that's what I kind of see stables as doing. So is there anything else? Am I missing it?
Well, I think in a way that question kind of leads into a point I was going to make as well about Circle, because I think this is where Circle in USDC could have an edge in the stablecoin in the stablecoin wars, if you want to call them that, because Circle is working a lot on payments and things like that, and this kind of real world utility that you mentioned, Rob, or that you're looking for.
Right.
So, yeah, I mean, I think we are starting to see more stablecoin payments happening. There was this phenomenon of companies beginning to accept crypto as payment, and I think stablecoins is going to make that option more attractive to more companies, especially once crypto sort of comes out of the bear market and people start to get more excited about it again. But I think you make a good point, and you're right to a large extent, I think, because a lot of it is just yield farming or liquidity pairs on exchanges, things like that. So I think that's a challenge that all stablecoin issuers, I think, need to address. Is that what is the actual use of this thing outside of merely crypto?
There is one other use that because I would personally use it for certain things. So like one issue, or I think one thing that makes stablecoins attractive in general, and I say this as someone who's not even using them right now just because I'm super risk averse, right? But as someone who has previously used them quite a bit, one of the nice things about them is that, you can send money to people around the world really easily with stablecoins. And, if I want to send money to someone via a bank, well, first of all, let's hope it's not a weekend, right? If you want to go to the exchange or something, and you want to buy cryptocurrency, or you want to go through a decentralized exchange and buy crypto, if you're holding stable coins in some type of a wallet, you reserve the right to quickly get those stables to wherever you really need to get them, right? I mean, if you want to go to a centralized platform, a decentralized platform, if you just want to send them to a friend across the world, or maybe you want to send them back to your family that lives in a country that you no longer live in, and you'd have to jump through 1,000 hoops to get them money otherwise. I think that is one of the benefits, but that's not really strictly reserved for stablecoins. So you could argue that a lot of different. Bitcoin also serves that purpose to some degree. It's obviously more volatile,
right?
Well, maybe not more volatile than UST, right? But it is, that is a use case of stablecoins, is that you have control over it, and you don't have to worry about the bank freezing it, right? Like think about all the stories you hear of people who have cash various places, and it just gets frozen for whatever reason, and so I think there is that other element of utility in the stablecoin market, and that's something that I've used, just being able to just send money whenever you want and not having to worry about what time of day it is or what day of the week it is.
Yeah, and then last, just to jump in, the whole thing about payments is true, because if we take there's this big story going on with I think it's Bank of America and Zelle and things that are going on as far as shutdowns. So there was this snippet on Paul Barone Network, on the Paul Barone channel. And it was a tweet put out, and it talked about transferred value. And it said, and it took a look at the top three. Zelle, since 2017, transferred value has been $1.5 trillion for transfer value. PayPal, as of 2022, which is kind of like an estimate, 1.14 trillion. And then stablecoins in the last 12 months has been 8.1 trillion. And I tweeted that out, and I took a look at the references that it had, and it was all there. One was from Zelle, was from the actual website. PayPal was from Business Insider, and the stablecoins was from the block. And I took a look at just the transferred value. So there is a lot out there. So I guess that would be the fourth one. So maybe it is a bigger deal than what we give it credit for.
Yeah. And of course, you're Ben, what you say is absolutely right. It's a way of transferring this value, transferring money to people without the interference of banks. Of course, there is the question of the issuers themselves, isn't there? Because I think a lot of people are very, and obviously Circle and Tether have frozen holdings before, and I think this kind of just kind of increases the need for a decentralized stablecoin that really works. I think, because I think the danger is that, there is that convenience, and we are bypassing the banks, and you can do it sort of any time of the day or night, which I think is a hugely underrated thing. As you say, like this idea of in the 21st century, and you can't transfer fiat, you can't transfer dollars to someone, for instance, because the banks aren't open, is just kind of laughable. But I think we need to be wary of these centralized issuers as well, who let's face it, the likes of Circle in particular have got very, very close ties to the US government, to the kind of US establishment, if you like. So I guess it just increases the need, as I say, for a decentralized alternative that no one can get in the middle of. You know, you can't freeze holdings or freeze transactions or anything like that.
True.
Yeah. Okay, and well, I think we've done terrifically well on that question to talk about stablecoins for several minutes and not to FUD Tether at all during that time. Yeah, it's obviously, I think it's worth mentioning, isn't it? Because Tether always comes up at times like this, and there's always that question mark over it because we haven't had an audit and stuff. But hey, I mean, let's face it, and I must say, in the comments as well, there are a lot of people, lots of people who quite happily use USDT and have done for years, and I guess Tether kind of has the riposte to it, doesn't it? That it's honoured withdrawals so far, and obviously in the wake of the FTX collapse, I think there was a huge amount of withdrawals against USDT, and it handled all of them.
Mm-hmm. Yeah. Another thing I thought I've been wrong about. I always thought that there was something going to happen with Tether. Still keeps trucking along. I don't know if it's going to keep going that way, but so far so good.
Yeah. And of course, we had that. There was that sort of hour or so of excitement just last night, wasn't there, when the DOJ and the Treasury Department were saying, "Oh, we're about to announce a big crypto crackdown," and everyone was, "Oh, it's going to be Binance, it's going to be Tether, it's going to be," and then a complete nothing burger. Had you heard of this exchange that they've sanctioned or cracked down on or whatever?
Bitslato.
I had never heard of it before.
I saw a lot of jokes on Twitter. People going, I had everything on Bitslato, everything.
No one even knows what it is.
Yeah. What a nothing burger. I mean, it was a relief, wasn't it? Because I think that's the last thing any of us wanted to see, a big crackdown on some big crypto company. But yeah, it was a bit of an anticlimax. Anyhow, let's move on. Let's talk about safe havens or perhaps the lack thereof. There haven't really been any over the past year, I think it's fair to say. So do you guys, have you got your eyes on any particular safe havens this year? And are there, I wonder, any cryptos that could play that role? Rob, what are your thoughts?
Oh, I'm telling you. So safe havens. So I like to diversify just a little bit because, again, not a genius, and I got to make sure I diversify a little bit to maintain the little wealth that I have. So as far as safe havens, I mean, Ben said it pretty correctly. For the last, I don't know, year plus, cash is king. Cash has been doing pretty good, and cash has been all right. So just been stacking that a little bit into stables, some degen plays, but real estate for me and the wife, we like to buy land, we like to buy real estate itself, whether that be condos or houses, because what's great about, especially right now, even in 2007, 8, 9, when there was a collapse of the housing market, so you don't lose until you sell. And the people that were losing their houses, the single family homes, they still needed places to live. So apartments would go first if they've lost their jobs, and of course they had to jam people in. But if you were renting back there or trying to flip, you weren't doing so hot. But if you could rent out the houses that you had bought outright or had a mortgage on and could rent them to single families, it worked out just fine. And then you could weather out the storm and the value skyrocketed. And then, of course, you just did the whole thing again. So for me, safe havens, we still like real estate, especially the tax benefits, because as the house depreciates over 30 years, you can take that as off your taxes. I don't know how it is in the rest of the world. And also the interest, if you are paying outright, as far as the mortgage, you can deduct that on your taxes as well. So I still like real estate in those areas, but safe havens, I mean, I'm still going to keep, like we talked about last week, I'm still going to keep dollar cost averaging crypto because I don't know what's going to happen, and then go from there. I think over time, things work themselves out. But right now, I still see a bumpy year.
Absolutely. And I mean, if you had to have a safe haven in crypto, what would it be?
Safe. if you go look back at coinmarketcap.com and /historical and just go over every single year and just look at which one, like if you go back to 2013, the top 20, you're not going to recognize most of those. 2015, same thing. 2016, yeah, maybe a little bit, maybe an Ethereum and XRP there. But over time, you're going to see one thing, which is going to be Bitcoin. So if I'm going to say, hey, which one's going to be the store of value? I'll probably go Bitcoin because that's been the number one for quite some time. Does that mean it's going to skyrocket and I'm going to make a huge, enormous gains? No. But as far as safety, probably do pretty well. And as far as the stables, who knows which one's going to win, like Ben talked about. I don't know. So I'm not going to do that. I'll probably just go Bitcoin, Ethereum. Ethereum's doing pretty good, actually, especially the things that are being built on it with the layer 2s. So sure.
Yeah, I was thinking Ethereum as well. I think Bitcoin's always the one that sort of springs to mind if you talk about a safe haven in crypto, and you have to do that in inverted commas, don't you? But ETH, I mean, ETH, let's face it, it's deflationary at the moment. It's deflationary even with sort of limited market activity, limited transactions happening, and yet it's still, you know, and as you say, it's held up pretty well over the last few months. So yeah, I think it kind of falls into that same bucket for me if there is a safe haven in crypto. And yeah, as far as real estate goes, it's that age old thing, isn't it? People are always going to need somewhere to live. And there doesn't seem to be. I think it's true in the US. It's certainly true in the UK that governments, successive governments, have just never got around to building enough affordable housing, and there isn't enough to go around. And I mean that makes it a good investment over the long term. And I think the key phrase there is long term.
Long term.
Yeah. Ben, what are your thoughts? What are your safe havens? What are you eyeing up in that regard?
Yeah. So as Rob said, I mean, my stance for 2022 was just cash is king. Probably should have been eggs are king, right? Not looking back. But yeah, I mean, I think Rob is right. Like some level of diversification is good. You don't want to put all your eggs in one basket. But you know, when you think about like cash is king, one of the most common forms of criticism to that, of course, is that inflation is going to sort of, you know, lead to you losing that purchasing power. And that's something I'm fully aware of. And, you know, when I think about like that stance that I had in 2022, and I still maintain to some level today, is that yes, I understand the purchasing power went down, but you know, I can still earn 4 to 5%, right, in fixed income investing, and it's better than losing 80% in the altcoin market, right? It's better than losing 90% in the altcoin market. I'd rather lose like 3 or 4% to inflation or something than take on the risk of losing 80 to 90% when we're just in a bear market, right? So that was what I said in 2022. And now that we're in 2023, I do think we're going to see things slowly shift this year. I mean, I do think we'll be turning the ship around at some point this year on the entire asset class as a whole. But if I were to think about like, well, where is, you know, what's the store, you know, what's the safe haven, right? I first look to, well, are we going to get a recession? And there are several indicators that suggest it's a high likelihood at some point this year. And we know that during recessions is where typically risk assets bottom. Now, with crypto, you know, we can speculate, but the truth is crypto's never really experienced a recession. What we can say, though, is that equities tend to bottom during a recession. And, you know, cryptocurrencies are seen by many as risk assets as well, and could also follow the same fate. So I would say, you know, I don't think that, you know, especially equities, I don't really think they're going to be the safe haven this year. Like I know a lot of people are hoping for some type of big bounce. And look, we've had plenty of rallies. I mean, you know, but they've all ultimately resolved to the downside is the issue, you know. So while it might make you feel good for a while, if you every time you just waited a few more months, eventually it resolved to the downside. So I will say the average bear market is about 9 months. That does not include a recession. So if we don't have a recession, then you could argue that the bear market is over. But if we do get a recession, then that can last, you know, 16, 18, 2 months, like 2 years. So with regards to, you know, what am I looking for, you know, what am I looking to for as a safe haven? I do think cash still reserves a slot. I don't think it's as obvious as it was a year ago. So like a year ago, think cash was just like clearly the obvious play, right? Like let the bear market just resolve itself for a while. Now, I think cash is still good because there's still going to be plenty of opportunities this year, I think, in risk assets in general. So having a healthy cash position is certainly a good way to go. Other things, I think things like precious metals, like, I'm nuclear, right? So like uranium, gold, silver, these things are these commodities. The precious metals are things that we really haven't seen run in our investing, at least in the last like 10 to 20 years. But if you look historically, there are phases where they actually do quite well. Now, I will argue that we are heading towards a more digital world, right? So I do think that Bitcoin is probably going to be a better play long term. But we also know that things like silver, things like gold, they can run. And actually, silver and gold have actually been doing somewhat well recently. Perhaps it is getting to be a somewhat crowded trade in the short term. I mean, they could always pull back. But I think over the next 5 years or so, you could see precious metals doing quite well. And with regards to crypto specifically, I mean, I have to go with Bitcoin, right? And this is something I talk about on my channel quite frequently, is the dominance of Bitcoin. And it is still cranking higher. When you exclude the stablecoin market, it's been going up since May of 2021, even though most people don't want to hear it. And if you include stablecoins, it's actually been moving up quite quickly. And so the whole idea is that, altcoins can bottom on their USD pairs at whatever point they want to. But the truth and what history shows us is that the altcoin market will still likely bleed against Bitcoin and Ethereum too. As you mentioned, Ethereum has been holding up pretty well. I mean, the altcoin market bleeds against both of them over the macro scale. And so, at some point, alts will bottom. I know people are hoping they already have, and maybe they have, but it doesn't mean they're not going to keep bleeding against the blue chips. And that's what history shows us, is that they're likely going to bleed for another 6 to 10 months after the bottom is in, right? So even if you think the bottom is in, the altcoin market is still likely going down on their blue chip pairs, like their Bitcoin, especially their Bitcoin pair. Now, I hold a somewhat controversial view on Ethereum, and it transitions, right? So like in 2019 and 2020, I was quite bullish on the Ethereum Bitcoin valuation. The very first video on my channel, in fact, is like when Ethereum's valuation on Bitcoin was at 0.017, and I said it's severely undervalued at 0.017. And now, though, I still think it's actually, as difficult as it is to say, and as I know people don't want to hear it, I still think it's overvalued here in the short term. I think that regulatory scrutiny is going to hit Ethereum harder than it's going to hit Bitcoin. And I think you're likely going to see it resolve to the downside at some point this year. And I think that'll mark a major bottom on the Ether Bitcoin pair. I do think Ether will eventually hit that 0.1 threshold. Like, I'm not a macro bear on Ethereum. I do think it is slowly gaining value against Bitcoin. But the truth is, right, is that Ethereum did go down against Bitcoin last year. It went down about 9%. And we still run the risk of what happens if we go into a recession. My guess is that the Bitcoin will probably hold up just a bit better than Ethereum. I think Ethereum is going to come roaring back next cycle. I mean, I'm not trying to say it won't. And it's possible that I need to get my eyes checked. But as far as I can tell, Ethereum is just has been putting in lower highs ever since the end of 2021. I mean, it was at 4,800, and then at like 3,600, and then at 2,000, then at 1,800, and then at 1,400, and so on and so forth. It just seems like it maybe not 14, but it just, so far, I mean, it's just been putting in lower high after lower high after lower high. I am somewhat biased. I will admit my bias. And my bias is that I have a very small position in Ethereum, not nearly what I would like to have before the next bull market starts. So I am mostly Bitcoin now in my crypto portfolio. And I think Bitcoin is going to be within the cryptoverse. I think Bitcoin, as long as you're excluding the stablecoin market, I think Bitcoin will be the safe haven for this year within the cryptoverse. And I do think for the next like half year, 10 months or so, you're still likely going to see altcoins continue to lose value against Bitcoin, whether the price of Bitcoin goes up or down. And so the argument is that it hedges you, right? So like cash hedges you in case the market goes down. Bitcoin hedges you either way, because the argument is that no matter what way it goes, the altcoin market is likely going to bleed against it. So if you have a favorite altcoin that you want to buy, my argument is that Bitcoin now, and then later on, you can probably buy more of that altcoin just by converting your Bitcoin to that altcoin later on. And that goes even if the altcoin goes to a higher valuation on its USD pair, it still might devalue against Bitcoin. And I would argue it's more likely to devalue against Bitcoin at least over the next 6 months or so.
Ben, I hope you're right. I can stop micro DCAing and then start dynamic DCAing as everything starts to collapse.
I mean, look, if you pull up most altcoin charts, like ADA Bitcoin, Polkadot Bitcoin, Avalanche Bitcoin, Solana Bitcoin, they're all just in macro downtrends, right? And we can get excited about the most recent pump, but
we do. Oh yeah.
Yeah, the truth is that they're all in macro downtrends. They're all basically getting rejected by their 20-week SMA, right? All these Bitcoin, all the alt Bitcoin pairs, or most of them. And so that's just the truth. And the reason why I say this is because I've been burned so many times on the altcoin market. Not just in 2018 and 2019, but in cycles before. I've been burned so many times in the altcoin market. And I want to make sure that people understand that there is a bearish bias, I think, on the altcoin market against its Bitcoin pair, and likely Bitcoin will lead us out of the bear market. And when it's for sure here, right, and when we're starting to trend back up, only then will you actually start to see altcoins make real ground against their Bitcoin pairs in a sustained way, where it's not just another bear market rally.
Yeah, we've all been burned. You're right. And it usually works like that, right? Bitcoin leads the way, and then altcoins follow suit. Then altcoins run, and then it kind of goes back in a circle. I'm okay with that. But yeah, we've all been burned. Because like guys like Ben, I think you've been here since 2013, 14. I always forget the year. Guy, 2015, 16, somewhere around there. And I was the latest in 2017. But we've all gotten burned in these altcoins. It's just how it goes. And everybody has this, like, even, I got to be honest with you. Even this last run that we had, the 20 or 30% run up, I was like, hey, maybe this is it. Maybe this is the start of the bull run. Seriously, I've been through these so many times, and I'm like, I almost had to slap myself and go, that's ridiculous. This is going to be the same thing. It's gonna gum up. It's gonna come back down, and it'll just be repeating. And I think we're seeing that.
Yeah. And of course, I mean, last word. I think before we move on, of course, Bitcoin, let's face it, is the only one of them all that's a commodity. And it ties into what you were saying earlier, Ben. There is about Ethereum. I mean, there is still this kind of sword of Damocles hanging over so much of the altcoin market, isn't there? That the SEC, that Gary and co. turn around and start going, you're a security, you're a security, you're a security, and of course that is going to have a huge effect on prices and valuations. So, yeah, I guess in that sense, perhaps. The safe haven in crypto, it really is just BTC for the time being until we get some more clarity on the likes of ETH and I guess resolution on the XRP case, which I think is expected sometime in 2027 or around then. So yeah, it's tough. It's tough to find those safe havens, isn't it? Okay, let's move on to the next one then. It feels like every week we get news of another crypto exchange or platform like Bitslati or whatever it was called that's gone bankrupt or is facing some investigation. So just quickly, guys, which platforms do you personally trust and why? Rob, do you want to lead us off here?
Sure, I get this question a lot, and of course, it's quite simple. I trust none of them. Because I put everything on a cold storage device. That's the simplest way I can do it. Now, which one do I use? It's Coinbase because I'm stuck in the US. And why do I keep dollar cost averaging if I have all these ridiculous fees for every different transaction? That's true, but in Coinbase, you can pay for what's called Coinbase One. It's $29 a month, and it eliminates the fees up to $10,000. If you don't want to do it every month, you can sign up for a year, and it's only like $20 a month. But every single month, because I dollar cost average Bitcoin every day, Ethereum almost every day, and a bunch of different alts once a week. So that's what I do.
Ben, how about you?
I really liked the meme you posted yesterday, Guy, about like, I don't know what Bitslotto is, and at this point I'm too afraid to ask, right? When I heard it, I'm like, are we supposed to know what this thing is? Like, I've never heard of this thing, but am I supposed to? I'm like, I live in the cryptoverse, and yet I don't even know what it is, But I'm actually in agreement with Rob on this. I don't think you trust any of them. I mean, and And I say that like so my view on if I were to say it like in a metaphor, my view on crypto exchanges is like this, right? Like they're like public restrooms. You don't really ever want to use them. Sometimes you have to, but when you do, you get in, you do your business, and you get out as quickly as you can, right? You don't hang around there, you don't do anything like that, right? You get out and you get somewhere else. So I think that none of them can be fully safe. But what I look for is ones that I'll say this, like say it like this: the ones that I trust more than others, right? Let me put it like that. The ones that I trust more than others are the ones that don't have native tokens. And I'm not really referring to stablecoins, right? But the ones that don't have native tokens, like look what happened to FTT, right? There's a lot of exchanges that have native tokens. And the problem is that those tokens don't really need to exist. And you might say, you know, the most common retort to this view is, well, you know, I can use this native token to reduce my trading fees, right? But all this is this is finding this is basically creating a problem so that then you can come in with a solution, right? If they want to lower the trading fees, they can just lower the trading fees. They don't have to create a token and say, hey, if you hold my token, we'll lower the trading fees, right? So I think there's a bigger risk with exchanges that have native tokens like that than the ones that don't. And I'm not saying that all of them are bad. It's just that you don't fully know if they're solvent or not. And the problem is that while I actually do hope that they are solvent, I don't want people to lose their money. I just don't think it's worth the risk, right? It's just simply not worth the risk to find out. It's the same thing that happened with FTX, right? Even though a lot of people thought it was safe, it's just not worth the risk to find out which ones are solvent and which ones are not. And periods of high interest rates those are what bring the zombie companies up, right? Then that's where you figure out who's not solvent. So I would say look towards exchanges that don't have native tokens is where I would personally start. And as Rob said, being in the United States, I have to go with exchanges that are regulated here. Obviously, Coinbase has been around for a long time. Again, I'm not sticking around, right? But the truth is that it's ignorant for us to assume that people just never use a centralized platform. Like, a lot of people to get into crypto, that's what you have to do. There's just not really a great alternative. So, I mean, there's of course DeFi, but DeFi is very complicated for a lot of people, right? If you live and breathe crypto, you can, if you live and breathe it, then you can figure it out. But for the average person who just wants to say get exposure to Bitcoin and Ethereum, are they really going to take the time to figure that out, or they just want to sign up somewhere and get their crypto and then just hold it for a while? So that's sort of my view on exchanges. I would say don't really trust any of them. If they have a native token, I think it raises the risk. It doesn't mean they're not solvent, okay? It just raises the risk on them. And I do think the last thing I'll say about exchanges, the ones that survive this, right? The ones that survive 2022 are already, they're at least showing signs of strength. And the ones that survive 2023, because it's going to be a somewhat choppy year. Remember how they make their money is through, one of the main ways they make their money is through just like like the cost on actually trading and stuff. We're seeing there's not nearly as much interest in crypto this year as there was last year and the year before. So what's going to happen, I think, is you're going to see which ones can actually survive. So what I would say is whatever exchanges can make it to 2024, I think you're going to have to at that point say there's a good chance they're gonna survive if they can survive throughout this year.
Yeah. Yeah. And of course, let's face it though, as Rob said, and as you said as well, Ben, however much you can trust an exchange, you can't really, or you shouldn't. And it's more about keeping your crypto self-custodied. And I was chatting with some of the guys here earlier about this, and one of them made a really good point. They said there's a great feeling that comes from just knowing, from holding that hardware wallet in your hands, holding that ledger or Trezor or whatever in your hands, and feeling that sense of control. I don't know if this is something unique to us here, but that sense of control that you have from, yes, these are my assets. I don't need to trust anyone. I don't need to, make any sort of assumptions that they're being looked after by any kind of third party. They're being looked after by me. And I think that sense of control, which I think, let's face it, is something we look for in kind of all aspects of our lives, I think. But that sense of control is really, really important, I think. Do you guys feel that as well? Do you guys get that sense?
Yeah, for sure. I mean, because you've seen so many platforms go down, and I don't want to be up at night wondering which ones are solvent, right? So yeah, I think owning your keys, having hardware wallets, and also not having like a single point of failure, right? Like you don't want all of your crypto on one software wallet or one hardware wallet, right? Because stuff happens, right? Like stuff happens sometimes, and you just don't know. Like, so I think spreading it out, sort of like, spreading your risk around so that if anything happens to one of them, then you at least have the other ones, right? And I've actually, I have lost crypto before in various I mean, this is, after you do this for a few years, right, you just get burned so many times that you just become as risk averse, super risk averse, and then you're just talking about fixed income investing when anyone talks about crypto, right? But I think you're right. I think you're right, Guy. I mean, you have to love the just having your own crypto and not having to worry about if some centralized platform is going to take it, and if you're going to be involved in some like bankruptcy proceedings for the next 5 or 10 years, right? Just having your own crypto and owning the keys to it, I think it's paramount, and it's one of the things that I think makes the bull case for crypto, right? I mean, because knowing what banks can do, it just frees your money whenever they want. That's part of the reason why we're here, arguably. I mean, the reason why we're here is to make money, right? But that's one reason. But of course, having your own keys and controlling your own destiny, I think it's a great point for crypto. So yeah, I would agree. Owning your keys, and a good mix of multiple wallets, I think, is the way to go.
Yeah. And then speaking of like mistakes, when we were talking about in the beginning, mistakes that I made, which was, I always thought like self-custody, when I first got in, I'm like, it seems a little more complex. And I always give this example, like, what if you're like single mom with 3 kids and 2 jobs? Kind of hard to figure it out, right? However, that was before the Voyager, Celsius, FTX days. So like me personally, like Ben said, he's lost some crypto. I've lost 20,000 ADA because I wrote it on a back of a piece of paper during the testnet days. I've lost 6 figures on Celsius and 5 figures on Voyager because of things that happened. And now when I take a look back and I go, was it really that complex to really do it? No, it wasn't. And I think moving forward, this is what's great about the class of 2023 and the people that are here right now, is that you can warn everybody moving forward. And hopefully we can protect a lot more people as the next bull run comes.
Absolutely. I always think as well, when we have these sorts of discussions, or when I make a video about hardware wallets or anything, if one person watching is kind of moved to go, actually, I'm going to do it, I'm going to move my crypto onto my own device, I'm going to take control, I think that then the whole discussion is worth it. It's time well spent. It's, even if it has to be one person at a time, that's good enough for me. And yeah, and I think this idea of financial freedom, we hear this term talked about so much in crypto, don't we? And I think there's this misconception that financial freedom just means having a lot of money. That's not the case. That's more financial independence, I guess. Financial freedom is being in total control of your finances, not having to rely on anyone else to do that. And that is what self-custody, that is what a hardware wallet and good OPSEC, that is what it gets you. That is what financial freedom is all about.
Yeah, exactly.
Okay, Rob, you mentioned Voyager and Celsius, and I think everyone watching sort of convulsed a little bit, but that leads us kind of nicely into the sort of final thing that I wanted to talk about. So, crypto Twitter kind of went wild with this a few nights ago, didn't it? I checked the timeline, and this was all anyone was talking about. Suzu and Carl Davis, the guys who brought you 3 Arrows Capital and who lost untold billions of dollars, they are back. They have another business venture They're seeking $25 million in seed funding for it, and they've called it apparently, tongue-in-cheek, apparently GTX, as in like FTX, but the one after. So to kind of see us out, I just wanted to get I wanted to get your thoughts on that, and try and keep the language as clean as you can. But
yeah, I'm not.
Yeah, I'm not. Rob, what do you make of it?
I'll keep it clean. I'm not in the military anymore. So like when I see these things, the first thing I think of is, first I thought it was like somebody messing around. I thought it was a fake account. I'm like, someone's trolling. I thought it was fake. But then I was like, oh my God, this is real. And then I thought to myself, you know what's funny? First of all, the hubris of these guys that think they can do it. The next thing I thought of is, who's the greedy SOB who's going to go along with this? Who's the people or the groups that are going to say, you know what? These guys, I know they screwed up before, but I like their moxie. I like where they're going. And it's the same thing as Kevin O'Leary, Mr. Wonderful. He was asked on, it was Crypto Banter. And Rand asked him a question. He said, would you hire Sam Bankman-Fried back? And he shifted in his chair a little bit. He goes, yeah, I would, because he's a great trader and he's pretty responsible and da-da-da. And I was like, you got to be kidding me. Talk about a grifter or a guy who's just super focused on profits only and everything else be damned. So for this one, I just want to see if it gets off the ground and see who's greedy enough to go, you know what? I like these guys. I'm going to go with it. So I'm just going to reserve my my comments from there. It'll be funny.
Keep your powder dry. Ben, what about you? What are your thoughts on this?
Yeah, I think it's absurd. I mean, like the idea that I don't know what's absurd is the fact that they're doing it, or the fact that there still are probably some people that'll use it, because there's always I think I don't really like it. I mean, I think that if you've gone through a cycle and you've completely gone under like this, like I don't see it. I mean, I think that you have to be there has to be some level of accountability there, right? And whether, I mean, for me, it's just like, of course, I'll never touch that platform. Yeah, I don't really know what to say. I mean, at first I thought it was a joke too, to be completely honest. Like I didn't really think it was not, and I'm still not really sure. I mean, like it just seems kind of weird. But I mean, I suppose if they felt the motivation to do what they did back a few years ago, that and here they still are, right? They probably still have that same motivation to just do something similar once again. I mean, like it's one of those things where until there's regulation and stuff, like what's to stop them? Well, what's to stop them, I guess, is just people saying, hey, you know what? I don't want to use it because I don't trust it or something, right? So that's kind of my opinion on the matter.
Yeah, I think that kind of touches on something that I wanted to bring up in regards to this as well, because a tweet that I noticed sort of shortly after this came out was from the CEO of Wintermute, who was basically saying something along the lines of like, well, if you choose to do business with GTX, then that's very much on you, but just be aware that you'll find it a lot more difficult to do business with Wintermute if you do. And I just wonder whether this is perhaps, I won't say a golden opportunity, but a chance for the crypto community, for the crypto industry as a whole, to kind of stand up and go and I guess kind of work towards something like these industry standards that Eric Voorhees was talking about in that famous debate with SBF, and just go as an industry, no, we're not touching this. And because I think you're right, people will invest in this. They will find money. Whether they get the $25 million thereafter, I don't know. But some people will take a punt on them. And I just hope that we get a kind of consensual, a broad consensus from the industry going, no. If you touch it, we're not going to touch it, and we're going to look very unfavorably on anyone that does. I think that could be an opportunity for crypto as an industry to maybe reclaim a bit of credibility. I don't know how you guys feel about that.
Exact same way.
Yeah. I mean, I think very similarly on it. I don't think that anyone should. Well, you know what Kevin said about Sam, like that really surprised me. But maybe the more I thought about it, maybe it really shouldn't, right? I mean, it shows you shows you where priorities are. Sometimes people, all they care about, right, is can they make them a little bit more money? And if the answer is yes, then that's it. But I think you're right, Guy. I think that, as a whole, you have to look at this and say, we're not going to stand for it.
Yeah. And it annoys me because shortly before we came on air, I got a push notification from the Financial Times, and there's her name escapes me, but she's a very sort of articulate crypto critic writing in the FT, and this was an article about this, the kind of the grifters in crypto know no shame, and these guys are back, and I thought okay, you have a point about these guys, you're absolutely right about these two. But that's not the whole crypto industry. In fact, most of the crypto industry, I think, is united in disdain or mockery for these guys. But again, we can't help. There's only so much we can do about the mainstream media, I guess, perception of crypto. But you just think, no, this isn't us. We can't let it be us.
Right. Good point.
But there we are. We're always going to be battling that sort of thing. Anyway, guys, we've run over time a little bit. I didn't ask anyone. I didn't ask people in the comments to submit any questions, but a few people did put a couple of questions forward. So, if you don't mind, if you've got a couple of minutes just to answer a couple. So, Crypto Hub is asking, will you guys be at some crypto conferences this year? And before you answer, I should say this isn't a shameless plug for the Coin Bureau conference in June, although perhaps it is. But yeah, are you guys eyeing up any conferences this year? Bitcoin Miami, Consensus, anything like that?
I haven't.
Rob?
Sorry, I haven't made any plans yet to attend any. That doesn't mean I won't. I probably will. I just we just had a baby like 3 weeks ago, so it's not really the fourth thing on my mind right now. But yeah, maybe in a few more weeks, I'll start to think a bit more seriously about like which one I want to go to this year. I went to Bitcoin Miami last year, so I'll probably go to at least one this year.
Yeah. And I'm going to one so far, and it's the Coin Bureau conference, and that's it. That's the only one that I have. Yeah, that's it. Yeah, if there's one in Vegas, I would like to go to one of those because I have friends and family over there. So if there's one in Vegas, I'll probably make a trip. But besides that, I got one. But wouldn't it be cool though if all three of us could be in London for the Coin Bureau conference, sit up on stage, and people could ask us questions? That'd be pretty slick. I'd like to see that.
Do NFA live, but actually live, right?
Yeah.
Imagine.
NFA the stadium tour. Yeah. That's the next one. I'll talk to the guys at Wembley Stadium, see if they've got any dates for us.
Nice.
One other one I just wanted to touch on, guys, just very quickly. I saw a few people mention this in the comments. I don't know if you've got any particular thoughts on this, but yeah, I saw this thing about the USA reaching the debt limit today, the debt ceiling. Do you think this crazy Congress will actually raise it? Remember 2011 debt crisis, risking default? You guys got any particular thoughts on that?
Ben, what did the stock market do in 2011 during this time? Do you remember? Because I could have sworn like once we had this debt limit, and then there was a big talk about it, there was a drop off, and then bounced right back after that. I think they raised it.
Honestly, I don't really remember. I wasn't really following the market as closely back then. I mean, I actually was looking a little bit recently at some of the stuff. Like sometimes, I first of all, I'll say this: like I don't think there's a clear direction that the market has to go just because they decide to go one way or another. I have seen that though. There was one period a few years ago when they really disagreed on the budget, and the market dropped like 6% or something in a day. But there's actually plenty of cases I think where the market actually went up when something like this was going on. So I don't really think there's a strong case relation that I can say one way or another. I mean, if it goes down, of course it'll be the reason, and if it goes up, of course it'll be the reason, right?
Perfect. Yeah, go to up. I'll just say that there's going to be a lot of posturing because we have a split Congress, House and Senate, so they'll probably argue and talk and say, oh, it's the Democrats or it's the Republicans, and they'll go back and forth. But at one point, they're going to have to say, okay, well, we got to pay our bills because we don't pay our bills and we get downgraded, so we're going to have to raise a debt limit. And that's another thing. Like if you take a look at it, I mean, there's a website. It's called Debt Clock. If you look at Debt Clock or U.S. Debt Clock, you'll see that Janet Yellen came out like last week and said, yeah, we're going to hit 31.4 trillion by Tuesday or Wednesday, and we blew past that already. We're almost at 31.5 trillion. So if we take a look at that, they're just going to have to do it. But it's another reason why, if you take a look at the fundamentals of crypto and digital assets and why they're so important, just take a look at World Debt Clock. It never stops spinning, and it keeps going up, and there's no stop to it.
I'm trying to load that site up on a tab to show to people on the stream, Rob, and it's not loading, presumably because it's just overloaded by the amount of debt on it.
Oh yeah. Or you know what?
Okay.
You can throw mine up. I have a cached copy of it.
Oh yeah. Are you? Hang on. Oh, I might have. Oh, here we are. Hang on a sec. Let me.
New technology guy. Sorry.
Oh dear. Right. Share screen, and I want to share this one. And hang on. There we are. Right.
Almost. Oh, there it is.
Hey. Yeah. It's there's just too much. There's so much debt sloshing around in the system, isn't there? It's yeah. Scary times. Scary times. Okay. Did I manage to stop sharing that? Oh yes, well done. I managed the technology. Okay, guys, I'll leave it there. I just thought I'd put up this last comment just to sort of see us out for anyone, for anyone still unsure about hardware wallets. But yeah, Rob, Ben, thank you so much for today. Thank you for joining. Apologies for letting it overrun a bit, and thank you everyone for watching today. Thank you for all your kind comments. Thank you for your time and attention. We will be back next week at the same time. That will be on Ben's channel. Is that right, Ben?
Yeah, it'll be on my channel next week.
Ben's channel, Into the Cryptoverse. And so, yes, guys, if you're not already subscribed to Rob on Digital Asset News and Ben on Into the Cryptoverse, then you are missing out. So at Digital Asset News and at Into the Cryptoverse on YouTube. And follow them on Twitter as well. And yeah, I hope our paths cross again next week.
See you guys next week.
See you next week.
See you, everyone. Bye-bye.